Hello and welcome to the Airline Business Podcast, discussing key news and trends in the global airline sector. This time, European revenue picture clears in the second quarter, while China feels domestic capacity crunch. My name's Graham Dunn, Executive Editor at Flight Global, and joining me as ever is Airline Business Editor Lewis Harper.
Hello Graham, how are you?
Yes, very good. I almost remembered who speaks at what point after the introduction of Lewis Harper, but not quite. Enough to put some self-doubt into my final words.
Yes, I wasn't quite sure whether I was meant to speak then, but we can remove the gap. We can remove the gap as ever.
It would spoil it if we got that part sorted. So we are coming back here. Now, on the last podcast, we were kind of feeling the early signs of the second quarter reporting season, and a lot of the US carriers had reported by then, and we were in the early days of European airline reporting. And I guess as more airlines have given out their figures and reported, and we've got a wider array of details, I guess it's become a bit clearer now in Europe what's been going on in that second quarter.
I think so, yes. I mean, we did almost promise, I think, in the last pod that we would have more clarity, and unfortunately, I think we do to an extent. And I think while there is it's a bit of a cliche, but as ever, there is a bit of a mixed picture. I don't think it's as baffling as it seems. I think the key point is, obviously, we talked about on the last pod how Ryanair had come out and said that already during the April to June quarter, fares were down sort of 15% or so, slightly offset by not quite so deep falls on the ancillary side, but certainly it was the fare environment surprised a few people when they offered that commentary, and particularly concerning was that they said that they expected to continue to need to stimulate demand through pricing into the peak June to September period, with potentially fares down again in that sort of 10 to 15% range, and that no one was expecting that, I think, and that's the kind of level where a degree of panic about maybe moderated capacity, etc., might come in. But just a couple of weeks ago, Michael O'Leary, I think, spoke to Reuters and said that their worst fears on that hadn't come through, and they're now looking at sort of fares down 5%, I think, in the calendar third quarter of the year. So there's certainly a much clearer narrative now, because I think it doesn't happen often when you get a sudden, unexplained kind of an observation on what's going on in the market by the biggest carrier by some measures in Europe. That is a concern, and obviously share prices fell, I think, despite there being quite contradictory comments from EasyJet, for example, saying fares look pretty flat in the summer. They were pretty optimistic, and then when we carried on through the earnings season, we heard, certainly on the low cost side, when the big airline groups, so Air France, KLM with Transavia, saying, okay, yields down a couple of percentage points, but no undue concern really through the rest of the summer. So O'Leary's clarification a couple of weeks back does kind of mean now that I think broadly Ryanair's seeing softening in fares, as are plenty of other airlines. I think one theory is the reason they were seeing such a deep fall against their competitors and peers in Europe was connected to their removing some of their inventory from the online travel agencies at the end of 2023, that just exacerbated what was probably a fairly moderate drop. So we've sort of got that clarity now. As I say, that we'd already heard from Finnair and I think Norwegian when we spoke before that they were seeing softness. They and Norwegian said they were surprised by some of the softness in the market. So it's not to say that isn't a thing. I think it's also important to say that's often being compared against a very strong previous year, and against 2019, I think the pre-COVID levels, actually, that things look a bit better. But broadly, we've got a slightly clearer picture where yields have moderated a bit. There is a sort of, I think in some cases, an end of the post-COVID pent-up demand really coming through. Not a surprise, that was always coming. That in that environment, costs become a more significant concern. So yeah, we sort of have a better idea where we are. But I think, as I say, within that, there's some interesting stories. I mean, you had a close look at Lufthansa Group, and I think they probably, correct me if I'm wrong, I'd probably say they had the kind of the most negative sort of take on what was going on in Europe this year and probably across the rest of the year. Particular reasons for that, but that was kind of the vibe I got from them. Is that fair?
Yeah, I think so. I mean, it's amazing sort of how quickly things can change, I guess, or the mood can change. Just a few months, a couple of months beforehand, Lufthansa were talking quite sort of positively about things. They had sort of like kind of high hopes of what they were hoping to achieve this year. But it has got tougher. They'd obviously given, I think, at the point we spoke on the podcast last, they'd already given their second profit warning for the year, and they sort of gave more detail around that. And a lot of it is related to the problems and challenges that Lufthansa in particular is having in Germany. So we know that there was strike disruption at the start of the year there. You have the continued impact of that, but then also you have the cost challenge that they have. I think what's quite interesting, none of these things are specifically necessarily only for Lufthansa or Lufthansa Group, but a lot of them really impact them more than others, or particularly Lufthansa. So you had kind of the challenge around the higher labour costs, which we're seeing across the board. You also have the supply chain issues. Again, they are particularly hard hit by that, partly because it's come just at the time when they were expanding their fleet, while they were looking to make big changes to the fleet, bring in new long-haul aircraft, being further hit by the supply chain challenges around rolling out the Allegris new business class product, or product on board product, and that obviously makes that situation worse. And then they suffered from the challenges that remain around Asia and routes to Asia, which as a business, that market has kind of stalled a little bit. There was lots of signs of progress, but we have seen some of their international carriers rolling back some of their planned China capacity in particular, but Asia as a general rule. And, that does create a big challenge. Lufthansa, it's a big market for them. So there's a kind of, I think they would still view things as there's plenty of upbeat opportunities ahead with that, but it means the pressure now has increased, and certainly for this year, it's not clear that Lufthansa, the German airline itself, will even be profitable this year. So that's a major impact. So that was a key factor. We have seen with Lufthansa, there's still the plan for the addition of ITA Airways, the Italian carrier, and I guess that's another theme that we talked a bit about. We talked about it quite a lot, but we talked about it, I think, on the last podcast, or not, about IAG and its plans for Air Europa, and there's been a bit of movement there as well.
Yeah, and it's funny, because Spore kind of gave this quite downbeat sort of, everyone's discovering things are much worse than they expected in 2024. And then obviously I joined the IAG call, and in terms of their commentary on markets, they're a bit like, I don't know what the problem is. We're obviously a much lower exposure to Asia, but generally pretty upbeat, fares holding up. But obviously that was a bit overshadowed, as you hinted at there, by the as they announced those a pretty decent set of financials where they were down on 23, but only just, which was unusual. Most carriers saw their profitability fall by much more than that, albeit they did remain profitable. But yeah, IAG announced it was pulling out of the deal to purchase Air Europa. So not that long after, there were much more positive indicators for Lufthansa, as you say, of its ITA deal. That one fell over, and I think that's IAG said it stopped the deal because it essentially the remedies required to make it happen. So the slots they would have to give away at Madrid were too significant to make the business plan work. I think we've talked about consolidation a lot because it's become such a big issue over the last 12 months or so. But certainly it was easy to see that was going to be a challenge, the remedies there, because the IAG carrier Iberia is the big player in Madrid, the second biggest player on long haul, and really the only other carrier with significant long haul presence locally is Air Europa. So getting that over the line was clearly always going to involve remedies. We talked before that there were some airlines ready to take those remedies, in theory anyway. But basically, IAG said it didn't see a way through with the amounts they were being forced to give away. So an end to that. That was obviously the second time that deal's gone wrong. So, I remember at the start of the year talking about how these things might play out, and there was a general vibe around the Commission that they were going to take a tough view on consolidation. We get to see how the remedies at ITA and Lufthansa will be distributed, but they obviously, the indications are they're happier, much happier with them. Maybe happy is too strong a word, but certainly willing to live with what they've got to do there compared with what's happened with IAG. So yeah, that bit of consolidation is over now. Who knows whether Air Europa is an attractive target for someone else. So that, we talked before, there aren't that many sort of airlines of that size and with that sort of strategic position available in Europe. So it'd be interesting to see if anything happens there. But yeah, IAG, it exists as a consolidation platform. Obviously, that's why it was set up. So I don't think it's clearly not going to be put off that mission by this. But its options are obviously more limited with that deal falling through, and obviously with ITA likely falling into Lufthansa hands now. So yeah, as I say, it did sort of overshadow the IAG results, which were by far, I think, the strongest certainly among the big players in Europe. And I think, as I say, partly due to lower exposure to Asia, but their key markets, Iberia particularly, are performing pretty strongly, even without that consolidation move at Madrid. And yeah, consolidation as a theme continues. Obviously, I think TAP we've talked before, but a bit more movement on them. And going back to Lufthansa, I think a few stories flying around about that in the past few days.
Yeah, absolutely. TAP's interesting. Obviously, Portugal previous government was getting lined up for the privatisation of the carrier, and so it's been a good time. I think probably to try and privatise someone like TAP. Having a good time post-pandemic where demand is strong and so forth. That progress, though, kind of stalled. Stalled a bit with the changing government. So, there's very much trying to get that process in line now. They've obviously, moving forward with the plans for a new airport in Lisbon, which is quite a critical part of the story of TAP and the privatisation. Investors want to see that there's the opportunity to grow. The new government has, the first indications are, yes, we want to do it. There is demand. It's quite interesting. So Carsten Spohr and some other Lufthansa executives were reportedly headed to Lisbon having talks with the Portuguese government. I can't really work out whether actually it's just that somebody had found that out and hence there was a story there, or whether there's particular reason to think Lufthansa's ahead in that, because Lufthansa, IAG, Air France, KLM, they've all pretty much said broadly the same, which is yes, we're interested, but we haven't seen what the tender is, we haven't seen the terms, we don't know what's up for grabs. And my reading of this is probably that this was just part of that. But as I say, you can't rule out that there might be maybe that puts Lufthansa in the box seat. But I would think again with Air Europa not happening, does that put greater onus for IAG to be interested? Air France, KLM, obviously. Now again, it had. This is where one thing leads into another. I mean, it has a relationship with Air Europa through SkyTeam, and if it's not going to lose SkyTeam to IAG in one world, maybe they can make better use of Air Europa, or maybe Air Europa becomes of interest to Air France KLM. A lot of moving parts. Certainly, one airline that is keeping an eye on all these moving parts seems to be Volatir. Now, this is an airline that we haven't really ever spoken about, but I think we spoke about them on the last podcast, and actually it's all changed, but there's more to talk about.
Yeah, its kind of business model is to avoid everyone, but somehow it's also touching nearly every story we're talking about at the moment. Yeah, obviously, I think in the last pod they were, along with Abra Group, the Avianca owner, were had set themselves up and had talked to the Commission about being remedy takers should the IAG Europa deal go through. That obviously hasn't, so that arrangement isn't relevant anymore and has been ended. But they've also talked in the past about being remedy takers, as we were just talking about the Lufthansa deal as well. So when those are announced, it would not be a surprise to see Volatil among those taking some of those remedy slots. But again, now Volatil have sort of in the spotlight again, just sort of on the consolidation, sort of on their own terms a little bit. So just a couple of days ago, there was a joint press conference in Athens with Aegean Airlines, with Aegean announcing it's made an investment in a capital raising round at Volatil, and it tends to do that again. It's 25 million euros first round. Second half of next year, another 25 million. Certainly the first one is in the form of convertible debt. So if it chooses to convert that, and it said it could do that at any moment, it says it would take around a 13% stake in Volatil. If it then does the second round, which it intends to do, converting that investment would up its stake to 21% potentially by the middle of next year. So it's an interesting, and not one we really saw coming. Might be a bit early to put it squarely into consolidation in the same way we talk about some of the bigger moves, but it's certainly, they weren't backwards in saying it's about creating a stronger force in Europe. It's interesting because Volatil, Greece is only its fourth largest market behind Italy, Spain and France. Germany is its fifth largest. It has got a relationship with Aegean that it signed a code share 3 years ago. So they don't have many overlapping routes. As I mentioned before, Volatil is very much a business model around connecting smaller cities with a low-cost model that, in more than half its routes, I think, are uncontested. And they were very much stressing that, no matter how deep the relationship gets, it's about, continuing those two business models, but, working together on strategy, eventually distribution, and who knows where that might lead. But it's very much about just strengthening each other, I think, by that move. As I say, it's not officially yet that Aegean have that stake, but that certainly seemed to be the strong intention from that. I did ask them about whether this would get any scrutiny, and I think the Aegean chair said to me, this is exactly the kind of deal that the European Commission wants to see, because it's two smaller players strengthening themselves. I did want to say you might want to have a look at the US to see what happens when two smaller players try to strengthen themselves. But yeah, that's we'll see what comes there. But certainly they seem pretty confident there wouldn't be any issues there. As this, and Aegean, I think, would not be the biggest investor in Volatil under this deal.
Yeah,
and they, as I said before, they don't overlap in many markets. So yeah, but an interesting, a bit of a left field one, and who knows why we'll be talking about Volatil in the next podcast.
Yeah, no, absolutely. We thought it was a one-off opportunity to talk about Volatil, but it's a two-off, which is excellent. We've been talking a lot about Europe, but of course we've got data now from across the regions now the reporting season is through, and you obviously with our lovely new shiny website at flightglobal.com/airline-business, we are tracking those with our benchmark airlines. And Lewis, maybe you can give a small little sum of where we are at the end of the second quarter. Now we've had kind of reporting out from all of the major regions.
Yeah, there's and you can get a 2-week trial on our site, so you can, even if you're not a full subscriber yet, you can have a look at these numbers. But essentially, we track around it's around 50 airlines for our aggregate data who report quarterly, obviously. And the reds are all in the profit columns. And by red I mean a weaker performance year on year. I don't mean that everyone's plunged into losses during the most recent quarter. Sorry, the second quarter. And I do think it's important to stress, as you sort of hint at there, there's an element of this where I think a lot of the year-on-year comparisons can look particularly weak, but that's partly because of the unusually high uplift we saw coming out of COVID, where, even into 2023 that we're comparing against here, where capacity was still constrained, there was still that pent-up demand playing out. And I think to an extent, the softening in markets, as I've said before, is to be expected. I think that the strength of it in some cases might have been surprising. But as I say, our aggregate data at sort of a global level shows, an operating profit of $13.5 billion across those benchmark airlines in the second quarter. That's down from 17.8 in 23. Net profits almost halved to 6.7. Operating revenue up nearly 5%. So that, I think we're sort of getting back to something more like organic growth levels. We certainly from 22 to 23, 21 to 22 as well, we saw huge revenue increases, but it's sort of settling down a bit now. So 4.7% feels something more like organic growth. But RPKs, ASK, so capacity and traffic, are both still up. RPK is essentially up 10%, traffic, ASK is essentially up 9%. So you're seeing a slight uptick in load factor year on year at a global level. A lot of that is driven by Asia Pacific, and specifically, if I didn't need to give myself that tongue twister, did I? But specifically in Asia Pacific, that's being driven, I think, a lot by the recovery of the Chinese carriers. Where we're still seeing, because of the reopening of China in 2023, that when that first happened, that perhaps load factors were quite depressed. They've kind of come back to something more like normality. So even though we see that globally traffic is outpacing capacity, I think at least a decent proportion of that is explained still by some post-COVID recovery rather than anything structural happening. But as I say, lots of red in the profit columns. There weren't many losses when we look at the regions. It just is a fairly consistent story of profits being down. For example, North American net profit around 4 billion from 6 billion in 23. European net profit of 3.1 billion, down from 4.5 in 23. And in Asia, net profit more than halved to $570 million from 1.2 billion a year earlier. Operating profits a bit higher, but as you'd expect, but similarly are down across the board. The only region that saw a negative figure for the second quarter was Latin America, where net profit came in at a loss of $1.2 billion. That's a swing from a profit of 400 million a year earlier, almost entirely explained by Brazilian carriers having a really tough time with the weakness of the real in the Brazilian currency. At an operating level, they didn't do too badly, but once you dropped in the impact of currency weakness against the US dollar, obviously a lot of costs, whether that's leases, fuel, etc., financing are in US dollars. So the weakness of the local currency has really hit those carriers hard, to the extent, I think, that Azul talked about it being a kind of new era, and for the airline, something it has to really factor in now going forward. And obviously Gulf is going through Chapter 11, so we didn't hear too much from them, but clearly that won't be helping their cause at the moment. But so I would encourage you to sign up if you haven't already for a trial, and I very much encourage you to sign up properly for this site. I think we've got some really great data there, and you can have a look in a bit more depth of what these figures are throwing out. But some really interesting moves, and it still very much is the case. I think that some COVID impacts are showing through in the data, particularly China, which is such a huge market. Obviously, even small movements in China can have quite a significant impact on the Asia Pacific region as a whole. So have a look, and there's some interesting trends I'm sure we'll carry on talking about through future earnings seasons.
So yes, that China capacity thing is a really interesting thing, and the story for the Chinese carriers in particular in the second quarter, that has been intriguing. I think you are seeing, obviously the numbers are improving in terms of revenue and profit for the Chinese airlines in particular, but there's still a lot of progress to be made. Air China, for example, is still struggling for profit, and whilst they're all on an upward curve, you certainly see some challenges for the Chinese carriers, not least around that capacity. And you were talking about that. It is an interesting market because you have had this late return to reopening, and it looks as though, the carriers have maybe been turning to the domestic market to fill some of that capacity.
Yeah, I think that's definitely the case. We know that China's domestic market is way ahead of where it was in 2019 in terms of capacity and traffic. And that is to an extent by design. I think to an extent, obviously, we know that we'll talk about international in a moment, but it is kind of picking up the slack from that. And when I say by design, I think, and it's a bit chicken and egg, I suppose, what came first here, but certainly towards the end of 2023, the Chinese government put a big push into encouraging domestic leisure travel in particular. That's obviously supporting some of that extra capacity that's going in domestically. That said, we know, and we look at other big domestic markets coming out of COVID, not least the other huge one globally, which is North America, where when that happens, we know that there are particular routes that get a bit overcrowded in terms of capacity, and certainly some of the commentary coming out of China, the little commentary we do get suggests that certainly more than one of the big carriers saying there are concerns over some overcapacity in domestic markets, and that's certainly not a huge surprise. As I say, looking at IATA has long flagged how strong that market has been in terms of capacity post-COVID. So certainly a trend to watch there. And as I mentioned, this is helping to offset the sort of weaker international picture. It's important to stress that I think most sort of assessments are saying that international connectivity to China is around 80% of what it was pre-COVID. That clearly is lagging. Most international markets are certainly away from Asia, would be more towards where they were, or if not above pre-COVID levels. Obviously, there are particular reasons, not least Asia's slower comeback from COVID generally, why Asia's a bit behind. But certainly there are particular reasons why China has been much slower to come back. As I say, again, it's a bit chicken and egg on that encouragement of domestic travel. I think before that there were clear indications that international travel wasn't going to come back as strongly as some might have hoped. I think there's a lot of geopolitical reasons for that. We know very well about the tensions between the US and China, and that does extend specifically to issues around how much access each country is giving to the other on in terms of rights to fly into the country. So that is down very significantly, and that was obviously a big pre-COVID market for carriers on both sides, China. So yeah. But one thing to mention is that our colleague Alfred had a look at some of the data on this, on international specifically, and it does look like while overall numbers are down, the Chinese carriers are doing more within that than they were pre-COVID. So they're essentially, to put it one way, they're picking up the slack from over foreign carriers not serving China as much as they can, obviously, where that's possible. So that's an interesting trend. We know that the big Chinese operators are state-owned. They have they want to be making money, but as we know, state-owned carriers also have an imperative to serve the country and needs perhaps sometimes go beyond the profit imperative. So I suppose there's a natural thing. China wants to be connected internationally still, so it's not a surprise that perhaps those state-owned carriers are in a better position maybe to pick up some of the slack, even if that demand isn't probably enough commercially for some, certainly foreign airlines. The other thing to point out clearly is Chinese carriers do have an advantage in certain European and North American markets because they can still overfly Russia. So that's another reason why they might be taking a bigger proportion of the slightly smaller international pie at this stage in the from where we are in I guess the country's recovery overall. But it's also noteworthy that overall the Chinese carriers, certainly in the first half of this year, have been above pre-COVID capacity and traffic for the first time since COVID hit. And as I say, in some cases, the overall international market touching China is down, but in some cases, I think the Chinese airlines are also, not trending far off their pre-COVID international capacity, even if the overall market is down. But they're certainly there's certainly a lot more domestic capacity around, that's fueling that overall kind of rise above pre-COVID levels. So it's a slightly opaque market to follow. I won't lie. It's tougher for us to get commentary out of them. They're pretty open with their financials, and yeah, as you talked about, there are clearly still some challenges there, albeit there's been some improvement year on year. But it's an interesting, as many markets are at the moment, really interesting to watch. And there's still the fundamental question, I guess, is is this structural now? Is China not going to see that recovery back to what we were seeing pre-COVID in terms of international traffic? And I think when you look geopolitically about the kind of split being seen in the world, certainly around the Russia-Ukraine war and how that's affecting relationships between countries, we know that to a degree, I think some of that is becoming structural, and it may be difficult to see certainly markets like the US coming back gangbusters anytime soon.
It definitely feels like a very different time. We've been at, I think we were out in Chengdu, weren't we, for an event, a big global networking event, for probably 7-8 years or so ago. And at that point, the talk was all about kind of not only the potential market, the established markets, but developing these secondary markets, both secondary points from big hubs in China to Europe, but also places like Chengdu and so forth. These, which are massive, they're massive, absolutely massive populations, and so people were talking about the potential of that. And I think that was around the time that BA started a flight to Chengdu, and here we are in the last few months that BA has pulled its Beijing service. Virgin will this winter pull its Shanghai service. It's served that route for 25 plus years. So that shows the level to which actually I think airlines, certainly international carriers over the past few months, have taken the view that the climate, the opportunity, this isn't going to change anytime soon, and that they can deploy their capacity elsewhere. Now, I suspect they're confident that nobody else is going to try and fly in there other than a local Chinese carrier, and many of those routes are determined by laterals and frequencies and so forth. So, the competitive position maybe isn't hit quite as much, and they can make a straightforward decision. But I think it's really striking, that different kind of tone that it sets, and it's interesting, that one of the routes Virgin is picking up now is flying to Riyadh in Saudi Arabia. That'll fly there next year, and it shows another upcoming market that we're going to see sort of more people flying to. So, it is definitely interesting. I suppose the other point around Asia and China is the numbers are pretty good in that region, but obviously Asia is further behind in what we've seen in Europe, and what we've seen in North America beforehand was that kind of correction, then overcorrection, and so forth. So I suppose the question is, can we expect tougher times ahead in Asia Pacific?
Yeah, it certainly is. I think, as you say, kind of North America went first in terms of coming out of COVID. We're seeing Europe, certainly, if Carsten Spohr's narrative is correct, we're probably seeing a slightly more challenging year than expected in Europe. And yeah, it'll be interesting to see whether Asia, I think to an extent it is already. I know that you look at the figures for like Singapore Airlines, for example, obviously it was one of the first carriers to start operating in Asia coming out of COVID. That gave it, it was a really tight market capacity wise. In common with many of its peers, you could almost charge what you want to get, because everyone was desperate to travel and there wasn't the capacity. But yeah, it'll be interesting to see whether these dynamics we're talking about in Asia, particularly around China, either muddy the waters too much to see a clear sort of post-COVID correction, or whether it will kind of rumble on in the background. But it certainly it does seem the case, the massive optimism about everything at the end of 23 for a lot of carriers, certainly in Europe, is fading a little bit. I would stress that I don't think anyone's saying things are disastrous. I certainly think more broadly some of the economic indicators haven't been quite as bleak as expected. I don't think we've seen the levels of recession that we thought we might at some points last year. That said, I think some recent data coming through again is there's been some wobbles about what's going on in the US economy. I think some of the jobs data is starting to weaken slightly. So yeah, more broadly, there are themes to keep an eye on. But yeah, with Asia in particular, it will be interesting to see if we do come out of this year with Europe feeling like it actually has fallen onto the back foot slightly, whether that is just a cascading post-COVID effect that Asia can look forward to as well. So yeah, that not one we can call now, but it certainly wouldn't be a surprise to see that play out at some point.
Excellent. So plenty to look out for over the rest of the year. But Lewis, I think we'll leave it there. Thank you.
Thanks, Graham.
As a reminder, you can catch up on all the news and stories we've mentioned in this podcast at flightglobal.com/airline-business. You can, as Lewis mentioned, log onto the site and get a 2-week tryout of the site and see if you like it. If you've enjoyed the podcast, please like and review us. Don't forget to subscribe to get new episodes directly in your podcast feeds. And we'll see you again next time.